Hello and welcome to episode 336 of the Money to the Masses podcast with your resident expert, as always, Damien Fay, and me, Andy Leaks. Damien, welcome back. How are you doing?
I'm good. I'm very good, Andy. And before we go on to anything else on the show this week, I'm going to make a plea to everybody out there. So last week we did a show, and I think it was possibly our record downloads. It was certainly had to be up there because I noticed the size of our downloads last week, which is obviously an incredible achievement, and we love that fact that people really enjoy the show and people write in. But I want people to go and review the podcast because I do occasionally mention this. Normally we say at the end of the show, don't we, Andy? And I went and looked, and nobody's actually reviewed our show, amazingly, over the summer. I think everybody's gone away. So I did joke to the office before I came in here that if nobody reviews the show this week, then I'm not going to do it anymore. But that's I can't chuck around idle threats. So if you could please review the show this week, it'd be much appreciated. And we will pick one or two of those to actually send out some Money to the Masses mugs. It's been a while since we've done it. So please review the show. Tell us how much you like it, whatever you want to put in there. Obviously, you can put whatever star rating you want as long as it's 5 stars.
Yeah, that unlocks the special ability to win a mug. It doesn't say that in the terms and conditions, but that's what it will be.
Yeah. So please do review the podcast this week. On the show this week, Andy, I might as well go straight into that. What we're going to do is bring Bronte back onto the show this week. Now, there's been quite a bit in the press about Bitcoin, and we have done past episodes talking about Bitcoin, what it is, and cryptocurrencies and how they work. And we get messages from people and emails regarding Bitcoin and cryptocurrencies and how you invest in them. So we felt like we had to do a piece that explains how that world works if people are interested. Now, it's not for everybody at all. It's not even for me, to be quite frank. But we're going to bring Bronte, who does a lot of the crypto writing at Money to the Masses. It's a huge area in finance now, whether people like it or not. So we have to put stuff out there. She's going to come on the show, talk about that and crypto exchanges. I'm then going to go on to give the flip side of that and talk about Bitcoin scams that are out there. So if people are getting involved in Bitcoin or cryptocurrencies, things they need to be aware of. And finally, we're going to do a piece on the tax changes that happened this week. So national insurance is going up for everybody as of next year. The pension triple lock, so the state pension age inflation protection, is now changing, which is big news for everybody really, but particularly pensioners. So I'm going to explain what was announced and how it's going to affect you.
Okay, so let's get into the main part of the podcast, and we're going to be welcoming Bronte back to the show to talk about cryptocurrency. Bronte, welcome to the show.
Hi, thanks for having me again.
So Bronte, why don't you explain exactly why we've got you on the show this week? What are you talking about?
Okay, so cryptocurrency has been all over the press recently, so I'm just going to cover, for all those who are interested in investing in it, how to do so, and some of the best places to go to purchase Bitcoin or any other cryptocurrency.
So as you say, Bronte, Bitcoin has been in the news a lot this week because, interestingly, El Salvador adopted it as a legal tender, but it didn't go quite according to plan. I think there were protests, the price crashed on the day, and it just kind of emphasizes at the moment that cryptocurrencies and Bitcoin in particular, because it's the most well-known, isn't really a viable method of payment right now, but it is slowly being adopted in certain places around the world. But obviously El Salvador is leading the way. Just to highlight to people, if you're interested in Bitcoin at all, go back to episode 321 where we did a whole guide to Bitcoin and cryptocurrencies and explained exactly how they work. And we had a lot of great feedback after that particular show. So while Bitcoin and cryptocurrencies aren't really being used mainstream as methods of payment, they are gaining increasing traction as investments, particularly as inflation hedges. And I talked about that on podcast 317. So go back and listen to that show where I compared the movements of Bitcoin and gold, which is a very interesting dynamic there. So, of course, Bitcoin and cryptocurrency isn't for everybody in any way, shape or form. And we're really doing this because of popular demand. And so it's a conversation we're almost having daily and we can't not talk about it. So the one caveat I would say before we start with this is that if you're going to invest in anything like cryptocurrencies, then you have got to expect that you could lose all the money you put in. And like any singular investment, and I would even say it about people who buy individual shares, that you shouldn't be putting sizable amounts of money into these. So for me, I'd never put anything more than 5% of my investable assets into a single commodity of any kind, including cryptocurrency. So getting all those risk warnings out of the way, it's not for everybody. This is an interest piece, really. Then I'm going to hand over to Bronte to start to run through a step-by-step guide of how you could buy Bitcoin and cryptocurrencies.
Okay, so just building on what Damien said about the volatility and the risk that comes with crypto investing, not just Bitcoin, but other altcoins as they're called as well. We have loads of articles on the website which can help you invest in cryptocurrency responsibly. We've got our beginner's guide to investing in cryptocurrency. We've got how cryptocurrencies are regulated and how they're not, which we're going to talk about a little bit later. We've also got how cryptocurrency mining works and an explanation of what maker and taker fees are. So there's a whole wealth of things that you can help to inform your crypto decisions.
And we're going to put links to those in the show notes of this episode and also on the website. So we post this show on the website with all those links and resources underneath the player, so you can go and find them there if you want to.
Brilliant. So the first thing I would say is before you put any money into Bitcoin or any cryptocurrency, you need to be checking and tracking the current and recent price of whatever cryptocurrency you're considering investing in. So there are a number of websites out there which offer services where you can track the price and the value. For example, CoinDesk is a really popular one, and this website allows you to track the real-time price of the asset as well as its recent performance. And there's also other market statistics which you can use to help make an informed decision on your investments. So do make sure to use those kind of websites to make sure you understand the volatility and the sort of patterns that you can expect from cryptocurrency. So step one, you're going to need to set up a cryptocurrency wallet as part of the process of purchasing any type of cryptocurrency on any type of cryptocurrency exchange. Now, we've got an article on the website that explains this in great detail about what a cryptocurrency wallet is, but essentially it's where you keep the keys, which are like the username and password, which enable you to have access to your crypto assets. And you're going to need a place to store those where only you can read them so that no one can access your cryptocurrencies. Now, I won't go into too much detail about this because we do explain it in the article on our website about cryptocurrency wallets. But there are actually two different types of wallet which you can choose from. A hot wallet, which is essentially something that's on the internet and it's software focused, and cold wallets, which are offline and usually in the form of an external hard drive like a USB. But ultimately, whichever type of wallet you choose is down to personal preference. So step two, once you've set up your wallet or you've decided where you're going to store your cryptocurrency keys, you're going to need to choose an exchange platform to actually purchase your cryptocurrency from. And I'm sure you've probably all heard of Coinbase at some point, but there are loads more, and each platform has its own unique features. Their fees often differ widely depending on the type of cryptocurrency you're trading, the type of transaction you're undertaking, the type of payment method you're using, and even where you are in the world. So make sure you do your research. And we also have a list of the best cryptocurrency exchange platforms in the UK on our website.
So you've actually gone through and looked at all these transactions and spent time going through them and crunching the numbers, haven't you, Bronte? So if you want to see that research, we won't run through it on the podcast because it will be wordy and you'll all glaze over and lose interest. So what we're going to do is link to that analysis so you can look at it. But broadly speaking, how much is it if you're investing in, say, Bitcoin? What sort of broad range of charges do you get?
So broadly, the most popular exchanges charge a transaction fee between 0.25% and 0.75% for most transactions, but this does differ depending on what type of transaction you're undertaking.
So for listeners' benefits, given that you've gone through all of these, Bronte, and none of these are regulated, that's one of the things we're going to clear up, isn't it? Like regulation on cryptocurrencies and the exchanges is non-existent in the UK,
Absolutely.
isn't it?
So the one thing to bear in mind and really pay attention to is that any and all cryptocurrency purchases by UK investors are not protected under the Financial Services Compensation Scheme, which normally covers investments for up to £85,000. But cryptocurrencies, well, that doesn't apply to them. So bear that in mind whenever you're investing money in cryptocurrency.
So it goes back to that point. If you are going to invest small amounts into cryptocurrencies, then it is best to keep it small because you've got to expect or be comfortable with potentially losing all of that money. And the FCA have even said the same thing in a warning about cryptocurrencies. Despite their popularity and they're gaining extreme extreme popularity because it feels like I can't go anywhere without people talking to me about cryptocurrencies, even though they've never made an investment in any kind of mainstream investment before in their life. So if we think about the crypto exchanges, Bronte, you've gone through, looked at them. If I had to get you to say crypto exchanges for beginners or something like that, have you got some that you could highlight for people for them to go and have a look at themselves in different categories? So let's say a crypto exchange for people who are just starting out.
So I think all round the best cryptocurrency exchange for beginners or amateur cryptocurrency investors is Coinbase. Now, this is probably the one you've all heard of to some degree. It's extremely popular in America and increasingly popular over here. So although Coinbase's fees are not the lowest on the market, I'd point out that fees are not the only thing that you should be looking for in the best crypto exchange for you. There's a number of other things you have to consider, such as if you're not investing in Bitcoin, for example, you're looking at another altcoin like Ethereum or Litecoin. They might not necessarily be supported by every single exchange out there, so make sure you do your research. Although Coinbase doesn't actually offer the largest number of cryptocurrencies to trade with, which may be an issue if you're looking to invest in more niche altcoins, it's got an extremely user-friendly interface, and it's got, frankly, a very global appeal, and many people are already familiar with it. So it's a great option for beginner crypto investors, particularly those interested in Bitcoin.
So what about the other crypto exchanges that you've highlighted?
So I've highlighted the best crypto exchange for low fees in our article, and I've settled on the London-based exchange, whose name I probably can't pronounce properly, and I'm just going to spell out. It's cex.io. Now, this one offers some of the lowest transaction fees on the market, starting at the highest point at 0.25%, and that can go as low as 0% completely, which is significantly lower than many of the competitors on the market. It also has 24/7 customer support, which you'll find is a rarity when it comes to cryptocurrency exchange platforms. They can sometimes be quite difficult to get a hold of, so that's what makes this one particularly appealing. So this is a great option for investors looking to minimize extra costs and potentially have an aspect of human touch in there too if they have any queries.
Good. So any others that you've highlighted?
And finally, I've highlighted the best crypto exchange for altcoins, which is Bittrex. Now, this one has over 300 different cryptocurrencies on offer, which is far overtaking most of the competition. Even those like Gemini, which have 80 plus, it's still way more than that. The downside is that Bittrex's fees are quite a lot higher. They start at the upper cap at 0.75% for UK customers, which is quite a lot higher than a lot of the competition. But that's offset partially, at least, by the sheer number of cryptocurrencies that you can access.
Interestingly, you and I were having a conversation before the podcast where with the latter crypto exchange that when you go on, you can be presented with different information than somebody else from another country. And we had somebody actually get in touch to say the charges we talked about were different to what we had written in our articles. And it turns out it's likely down to their IP address. They're probably using some kind of VPN or something. So if you're in the UK, you get different charges on these platforms, or this last one, than if you were, say, in the US. So you have to double check you are on the right website. So once you've picked your exchange platform, Bronte, what next?
So the next step is to create an account with whichever exchange you have picked. So the process will differ slightly depending on which one you've chosen, but generally speaking, you will go onto the website or the app and click on register and set up an account. This usually involves entering your email address, picking a password, and potentially authenticating your identity with a confirmation email. But once that's done, you move on to completing security checks. Now, this again differs widely depending on which exchange platform that you've picked, but normally you have to satisfy certain anti-money laundering criteria and the know your customer rules of the country that your exchange was originally located. So they might ask for your mobile phone number for two-factor authentication, and some exchanges will even ask you to upload a photo or a scan of your ID, although this is quite rare these days. So once you've done that, you can move on to adding your payment method. So in terms of adding your payment method, you've got to add either a bank account, debit card, or credit card before you start buying anything. But bear in mind that adding a bank account is generally recommended if you're buying large amounts, because the transfer fees for this payment method tend to be quite a lot lower than sort of instant buys on credit and debit cards. If you do choose to pay with a debit or credit card, you'll probably have to supply bank account details in the future anyway if you want to withdraw your funds. So once you've set up your payment method, the last step is to make your purchase. So whether it's Bitcoin or any of the other altcoins, generally you're going to go onto the app or the website and click the buy button. You'll usually have to pick which currency you're going to be purchasing it in. So for most of our listeners, that will probably be pounds. And the amount of Bitcoin that you've purchased should pretty much instantly be in your cryptocurrency wallet, which you would have linked to at the point of setting up an account with that exchange.
And some exchanges actually provide wallets, don't they? If people go back to the article that we're going to link to on the Beginner's Guide to Bitcoin and the wallet article that we'll link to as well, it explains how that all kind of works, doesn't it?
Yeah, so some of the exchanges, for example, Coinbase, have their own integrated hot wallet, which is already on their system, but not all of them do. So read our reviews, do your research, make sure you know what you're getting into.
Brilliant. I think that was a great roundup of how to buy cryptocurrencies. And of course, as I said before, we have to cover it for being independent and covering everything to do with money. It's not something I would personally get into, but our listeners are increasingly getting in touch with us talking about it. So we are duty bound to cover it. But to give balance to that, now Andy and I are going to talk about cryptocurrency scams.
Okay, so let's move on to that then. We've seen quite a lot in the press recently about these scams. So what are we covering on this?
So there are a lot of scams in the Bitcoin cryptocurrency world. It is one that, as Bronte said, it's unregulated. It is a little bit of a wild west as well. So because of the anonymity that you can have when you make Bitcoin and cryptocurrency transactions, it obviously can attract a certain type of person to that world. Now, a number of the banks earlier this year started to block payments to crypto exchanges because they're trying to limit the potential exposure to fraud for a lot of their customers. So even if you did want to trade or buy Bitcoin, then you may find you can't do it via your bank when you want to transfer money across. But there have been a number of scams that have come to light recently, and there was one story which even made it to the BBC this week where somebody lost £500,000 on a Bitcoin scam. So what I want to do is talk about some of these scams so people are aware of them. Now, interestingly, a number of the big ones are linked to what are known as romance scams. So they start somewhere else. So they might start on a dating app. For example, there have been a number that started on Grindr, but the dating app is irrelevant, to be honest with you. And what has typically happened in each of these cases is that somebody has started to build up a rapport with someone. So no matter what they're doing in terms of checking this person seems to be a real person, they're checking the photos that they're seeing. So there are programs that can be used to check that the photos you're being sent aren't being taken from the internet somewhere else. So that whole catfishing thing, which is something that absolutely blows my mind. But there are stories of people who have taken all the precautions and then they feel like the person is a genuine person. They actually even chatting to them live on Skype calls over many, many months and feel like they've actually got a rapport and a relationship with this person. Of course, lockdown did enable some of these fraudsters to take advantage of the inability to meet people. So whenever somebody doesn't want to meet with you, that would normally raise alarm bells if you're building a relationship online. But there have been scams which start on these dating apps. And then what tends to happen, the person starts to build a rapport, maybe some form of online relationship with the person and become friends. But then at some point, that chat will move on to something like WhatsApp. It will move on to another network of some kind. One of the scams which happened to a lady, the person eventually, after many months, it came to light that they'd said that their job was working for one of the crypto exchanges. And she believed them. She had no reason not to. And then eventually the conversation turned at a later date that they would help her be able to start investing in it. She wanted to teach her how to start investing in Bitcoin. And given that there were a lot of people who lost money through the pandemic in terms of their jobs or their companies folded, then a temptation to be able to make a bit of money is obviously understandable. And in this example, she was concerned, not too keen, but then started off with a small amount. The person then showed them how to be able to trade, helped to open accounts, move money around, and started to gain their trust. But of course, all along, she thought this person was a genuine friend, potential partner. Then the sums of money increased as she gained more confidence, £200, and then eventually ended up in the thousands of pounds. And at that point, things then went a bit awry. The contact started to drop off, realised that actually the money she'd been transferring to places was going elsewhere, sometimes offer these exchanges into other places, and the person ultimately disappeared. There have been a number of these romance scams. They all follow the same pattern, which is they meet on a dating app, they develop a relationship, the person then teaches them or shows them how to invest, gains their confidence, starts with small amounts, handholds them all the way through it to eventually becomes larger and larger amounts. So be aware, some scams that occur on cryptocurrencies, and not just cryptocurrencies, general investment scams, are a bit like Trojan horses. They can come along, they're not necessarily obvious. They can take time, years, months almost, to grind out before you get taken for a ride. Now, another type of crypto scam have been ones via YouTube ads. Now, you'd think that something was on YouTube, it would be okay. And there have been adverts on YouTube with videos in them and with recognized cryptocurrency experts, so people who are out there in the community doing talks and everything like that. So they're using footage of those people to add some kind of credibility to the advert. And often the adverts will contain some form of giveaway. Maybe it's Bitcoin or Ethereum. And so people will become attracted to those adverts, go through, fill in a form, and then the merry-go-round starts, where you start getting involved in transferring small amounts of money. And in one case, a chap ended up losing £500,000 via one of these scams. So do be aware of adverts on YouTube. Other ones are comments. So if you look at a lot of videos, it's not just on YouTube actually, even on Instagram, and when we see it in our own Instagram, so we put things on Instagram, you'll see people pop up seemingly very kind, going to tell you how they made so much money from Bitcoin. They are kind of obvious when you look at them, that they just entered the conversation talking about trading on Bitcoin or any other cryptocurrency, or indeed any other investment, trading shares, for example. They are just a means of trying to get you to go through a link to then be able to try and scam you. A lot of these things sometimes go through to phishing scams, so where they get you to put in details, find out information, or get you to download malware software onto your computer. There are other ones. Twitter has been known to have giveaways on there. So what they will do is you'll get an account hacked that's been verified. So you know the blue tick. And what they might do then is change that profile to emulate someone like Elon Musk. This has occurred. So they'll change the profile pic, the name, and it therefore go and find an Elon Musk tweet from obviously the genuine Elon Musk, and then reply to that with their fake verified account, looks like the Elon Musk official account, and they will therefore talk about a giveaway that he's giving away so many Bitcoins or whatever, and then people go through to a link. Well, then you're going to go through to a scam site. So be aware of that. These fraudsters are very clever. And just a couple more types of scam that are out there. Technical support scams. Now, Bronte mentioned that most crypto exchanges are pretty poor when it comes to customer support, but there is a scam out there where people get in contact with you claiming to be from the exchange that you use and effectively gain details from you that enables them to steal your funds. Another one is an employment offer scam. So you get an offer of employment from one of the exchanges, and they get you to try and do some work for them on a promise of perhaps being paid in a cryptocurrency, but ultimately it's a means of trying to download software onto your computer or some kind of phishing scam. What's interesting, a lot of these scams are scams that have existed previously, but it's just the conduit now on a lot of these has become what is most popular, which is becoming cryptocurrency. So multi-layer marketing, which is, you'll get people who are real advocates of it. It's really a form of Ponzi scheme in a way, where you get multi-layer marketing, you sell a product and you get a load of people you recruit to go and sell the product, you get a cut of their sales, blah, blah, blah. If you're at the top of the pyramid, you might get away with it and make some money, but if you're lower down, you're never going to end up making money. I've known people in the past who've asked me to be part of it, not because I know what I do for a living, because I live next door to them, and said, oh, this is a great way to make some money selling some product or whatever. But it's multi-layer marketing, and it's happening a lot in cryptocurrencies. And sometimes it may be that they're trying to get you to sell tokens or buy tokens that are backed by real assets like gems or something like that, but it's just a Ponzi scheme. So there you go, there's a roundup of some of the scams that are doing the rounds that have obviously unfortunately cost people their life savings.
Okay, moving on to the last piece of the podcast then. It's something a little bit more topical. We like to keep things evergreen, of course, but this, we really couldn't ignore it. It's big news. It's been big news in the last week, and it will continue to be big news in the coming weeks as we understand more. Damien, these tax rises, what's going on?
So there have been a number of tax rises announced, and you could say cuts to pensioners effectively. So I'm going to go through this. Is not lots of detail, so we won't dwell on it too long. But firstly, national insurance is going up from next year. So it's going to increase by 1.25%. Now, that is because it's part of a pledge the government has made to fund health and social care reforms. Now, a lot of that money is going to go to the NHS, apparently £36 billion worth of funding over the next 3 years, and then eventually to social care. What it means is that from April next year, we'll be paying an extra 1.25% on national insurance. Then by 2023, you'll see this tax will be stripped out from national insurance and will appear on your payslip under a different name, which is a health and social care levy. So it's trying to make it more palatable. After the pandemic, obviously lots of people realised the NHS was underfunded, and they're trying to rectify that apparently. But what they're doing is a bit of marketing, and they're going to create this new tax that's meant to be going towards the NHS. What does it really mean for people? Now, the increase in national insurance from next April, so April 2022, will be £130 a year if you earn £20,000, £255 if you earn £30,000. You'll pay an extra £505 in national insurance from April 2022 for that year if you earn £50,000 in that tax year. If you earn £80,000, you're going to pay an additional £880 in national insurance. And if you earn £100,000, then you're going to be paying £1,130 in extra national insurance. So it's going to be impacting everyone. Of course, you may have seen the news, there's been a bit of an outcry because it impacts low earners the worst. But there's also going to be an additional tax increase on dividend income. So they're going to increase the rate of tax on dividends by 1.25% as well from April 2022. Now, currently, if you're a basic rate taxpayer, any dividend income over the annual allowance of £2,000, you get taxed at 7.5%. That's going to go up to 8.75% from April 2022. Higher rate taxpayers currently get charged 32.5% on dividend income above the allowance. That's going to go up to 33.75%. And if you're an additional rate taxpayer, then that's going to go up from 38.1% to 39.35%. Now, the other thing I want to quickly just mention before we finish the podcast is obviously the pension triple lock. Now, the pension triple lock is applied to the state pension, and it's meant to inflation proof the state pension so it increases over time. Now, the way they do it, the triple lock, is in relation to how the increase each year is worked out. So they look at the inflation rate according to CPI, so the Consumer Prices Index. They look at the increase of average earnings, and they look at the figure 2.5%, and they pick the highest number, and whichever one that is, that's the rate at which the state pension gets increased the next year. So what's happened is that the average earnings rate has gone up 8%. So if we apply that calculation now, then you look back to last year, wages have gone up 8%. Now, there's been a massive outcry by pensioners saying that the government has obviously gone back on its promises and they don't want to pay it because this is a year where they finally benefit and the figure's too high and I can't believe they're not paying it. Now, we're not getting political on this podcast, but you have to admit as a pensioner that what you would be doing is taking advantage of a statistical anomaly that occurred because of the pandemic. So because we had the pandemic, people were put on furlough. There were lots of people who lost their jobs. There were a lot of people who were low earners who lost their jobs. And of course, what that did when you look at the earnings since the pandemic, now we've come out of it, they've rebounded because obviously there are shortages of workers, the economy's opening up again, but you're comparing it to a lower base because obviously, as I say, there were people who have dropped out of the workforce and some wages were cut during the pandemic. Then you've got this anomaly where wages have increased apparently 8% basically if you're looking backwards year on year. Now, if you apply the triple lock formula, pensioners should be having their state pension increased by 8%. But at the time where other people are having tax rises, other people are still struggling because of the pandemic, to claim that you would still want your state pension to go up by 8%, which is a huge amount, actually isn't really sustainable. And it's nothing to do with politics. The other thing you've got to bear in mind, if we were increasing state pensions by 8% year on year, then it would become an unsustainable system. And in reality, it would bring forward the day where state pensions wouldn't be sustainable and the system would have to change anyway. And the likelihood of people like me and you, Andy, getting a state pension would start to diminish even further. So what's happened is the government has decided to remove that reference to average earnings for the next year. And so they will eventually bring that back because they need to, because we're going to have another general election at some point and they want to win the vote. They won't win the votes of state pensioners if they don't actually bring that link back to earnings.
But I suppose the key thing here is that we're saying is we are on the side of the pensioners too. They deserve an increase as everyone else does. It's just not this weird anomaly 8%. What is it they get?
Yeah, they're still going to have an inflation protected increase. So the increase is likely to be 2.5% or in line with inflation, which could be anything up to like 4%. So they are still being inflation protected. They're just not going to get a bonus because of a statistical anomaly of the pandemic.
Playing devil's advocate, if I was a pensioner, I'd probably be a little bit up in arms, but maybe essentially understanding the situation. But you've got to balance the books, right?
Yeah, you've got to. And the way I think of it, though, if that's the promise, I understand that. But a lot of people who've had to lose a lot because of the pandemic, I've known people who've lost businesses because of the pandemic, and we are all in this together. And this was inevitable, regardless of whatever government was in place, just because, like you say, you're going to have to balance the books at some point.
Okay, so that's it. We're done for this week's podcast. If you want to get in touch with Damien, you can do so in the usual way. It's Damien at moneytothemasses.com. Twitter, it's at moneytothemasses with the number 2. And we're on Instagram, YouTube, and all the usual places. Don't forget what Damien said at the start of the podcast. We'd really love you to review the podcast. It doesn't take too long at all, maybe a minute or so. Oh, and before we go, I've got a bit of an announcement. Something's going to change next week. I won't say what it is, but keep your ears peeled for next Sunday's podcast. Right, until next time.
Until next time.